All right, guys. So I'm just now starting to record this simply because I didn't notice. Just to rewind a little bit, my name is Gio from Boston, and we're doing this exclusive training for our organization. The different topics we're going to cover today, we're going to cover the psychology of trading. We're going to cover proper risk management. We're going to cover the moving average strategy. We're going to cover the JPC, or Japanese candlesticks. We're going to go over daily habits and rituals. And we're going to give a very quick social media training to help us build our business. Once again, I'm going to go ahead and mute everybody's microphone on this call. This is an 100% interactive call, so at any time, feel free to unmute yourself. Or if you have any questions, write them in the chat. So let's get to it. The psychology of trading, right? So most traders experience different thought patterns and emotions, right? It's human psychology, and most of that is displayed on the charts and through your trading. You can learn a big lesson from the difference of mindset when it comes to losing traders and winning traders. Smart thinking and discipline, it's even more important than having a good strategy, and more important than having that skill set in the Forex market. In reality, trading is 90% mindset and 10% skill, right? Listen again. It's 90% mindset and 10% skill. There's different feelings that we're going to fight, different emotions that we fight when we're in the market. And those emotions, depending on how we're able to fight them, how we're able to pull through with them, are either going to make or break us. We're either going to be profitable or we're going to lose money because of them. So if somebody were to say that your success in these markets is dependent on a strategy or you having a system, they're not 100% right, because that mindset and being consistent is a big part, of it all. Whoever that is, appreciate you. Anytime you can unmute your microphone. So if anybody tells you, that they got this perfect system or like this indicator-based strategy that is 100%, they're usually lying. And they just want you to believe, like, I don't know, either they know something that you don't, or like this combination. Like, there's nothing that's 100% guaranteed. Shout out to my guy Tizzy yesterday. He said the only thing that's guaranteed in this life is death and taxes. While it's true that the majority of people trading in the markets lose money, there's an explanation for that. And it's because most people assume that this is like a get-rich-quick scheme. Like, people they start trading, and they have these unrealistic expectations of what they think the market is. They're going to think they can quit their job in a week just because they started trading. They think they're going to turn $1,000 to $100,000 their first month trading, right? They think they're going to buy that Lambo or that mansion 2 weeks after starting. And that off rip is the wrong mentality, because the foreign exchange is an investment. You're thinking about investments, which are more long-term. We're not gambling, right? If you want to gamble, your chances, you're better off going to the casino, putting $1,000 on black roulette, and if black hits, you just doubled up, right? This is about learning a strategy that's going to pay you consistently with high accuracy, right? Not 100% accuracy, high accuracy. So coming in with those expectations is going to work against you, because it's going to like feed to your ego, and eventually You know, even if you hit and you develop that confidence, long term, you're not going to be successful, right? So just know this, and I want you guys to really take notes and really take this in, because these reasons here are why two people entered the same trade at the same time, and one of them is profitable and one of them isn't, right? The reasons I'm about to go over are going to lay the foundation for you guys to be consistent and take your trades the right way. I can't tell you how many times I've gotten messages after I send the trade and the person lost. They took a L, but the trade hit take profit. Either one, because they over leveraged, two, because they got in late, three, because they put in the wrong trade, whatever the case is. But it happens. And it's simply because of these different things, these different emotions that we get in the markets. So the first one is doubt. Doubt. The worst thing a trader can do is doubt himself. You having doubt is going to lead to you questioning your trades, going head first into other people's trades, simply because you don't believe in yourself, seeking trading strategies that don't exist. You doubting yourself is going to cause you to second guess going in on trades, and therefore getting worse positions. So doubt is something that can be detrimental to your trading career. You can get doubt by losing a couple trades. You can get doubt by losing some money. You can gain doubt by not going into the markets consistently, not, trusting what it is that you're doing. But doubt is an emotion that you're creating in your mind. So now, as you develop your mindset, that doubt is going to get harder and harder for it to, become an actual thing. Fear, being scared. It can be real easy to be scared to enter a trade, simply because, either you're a beginner, you're just getting started. B, you don't want to lose the money that you're trading, whether that's, your rent money or whatever it is. So it can get real easy to become fearful or to become scared again in the market. Once a loss occurs, like once you take a loss, it's natural to be scared. Regardless of how wealthy you are, regardless of how much money you are, how much money you've gotten. But you got to know that losses happen. You can't be scared. Losses happen. If we were scared of everything that happened in life, we would walk out of our houses in a bubble, right? Who seen that movie Bubble Boy from back in the day? So you're going to take losses, right? You're going to fall. You just got to get up and keep going, like Kiara said, right? Take the losses. It's cool. With wins, there's going to be losses. So there's no need to be afraid. It's going to happen. Revenge. Tizzy spoke about revenge trading yesterday. So revenge is something that can kill you. You just took 2 losses and now you want to win. So you're going into trades just because you want to win, not because of a setup. Excuse me, sorry. Right? So if you're having a bad day, it might not be the best day to trade. If you just got into an argument with your boyfriend, with your girlfriend, with your significant other, with your parents, right? Your kid showed up with bad grades and you're in a bad mood, it might not be the best time to trade. Take a second, calm yourself down, get in that good headspace. There's going to be another time. There's going to be another session. It's a 24-hour market, operates every single day. Greed. And greed is the biggest one, right? One of the most dangerous emotions. Greed. You win a couple trades And now your ego tells you, you know, you're the best trader. Let me tell you guys what happened to me. My first big loss, right? This was about a week and a half after I started trading. And I put in a trade. It was probably like around this time, right? It's crazy because I started trading 2 years ago, like around this time. So I put in a trade right before going to sleep. And I went to sleep. I had to work the next morning. I wake up in the morning. I'm in profit. I was in profit like $60. It wasn't even nothing crazy. But I was in profit. I had never made money in my sleep before. So what happened? Can you guys see my screen right now? Can you guys see the chart? Drop a 1 in the chat if you guys can see the chart. Appreciate you guys, right? Hold on 1 second. All right, my fault about that. All right, so my first big loss, right? So I got into this trade right here. This is at night. In the morning, it was a buy. In the morning, when I woke up, price was up here. So I'm in profit. I'm up like $60. It's lit. I'm like, word. You know what I'm going to do? I'm going to buy again. I don't remember what lot size I had, but let's just say that I had 0.10 right here. The second time I got in, I threw 2 standards. I'm like, it's lit. Right? And these are just hypothetical numbers. I don't remember exactly what it was, but for example, right? Price did this. Price dropped. It came back, gave me an opportunity to get out the trade, right? For my guys who've been trading for a little while, what pattern is this? Drop it in the chat. What pattern is this right here for my guys who've been trading for a little while? Let's see who's been paying attention. Double top. Double top. Thank you, Ben. Shouts to you. Right? So this created a double top, giving me a second opportunity to get out the trade, but I was being greedy. I'm going for that Lambo tonight, right? Price turned around and dropped. So not only did I lose the $60 that I had won, that I was in profit, but I lost like $300 more. Right? So on a $500 account, it was a big blow my second week trading, simply because I got greedy. I got greedy. You can take a losing trade just as fast as you can take a winning trade. You can go on a losing streak just as fast as you're on a winning streak. So it's always like important, imperative that you stay humble, you stay disciplined, and take your profits. Take what the market is giving you. Don't be greedy. Don't look for more. Take what that's giving you. Any trade can lose. I want everybody to say that with me. Everybody to say that with me. This 15 people on this chat, right? Matter of fact, I'm going to call y'all one by one. Let's see who's paying attention. Anastasia, your name starts with an A, so you're always first called. Anastasia, you there?
What's up? What's up?
What's going on? What's going on? I need you to say this with me. Any trade can lose.
Any trade can lose.
I appreciate you, Darian. Everybody say it with me. Any trade can lose.
Any trade can lose.
Anastasia.
Any trade can lose.
Any trade can lose.
Lit. All right. Any trade can lose. right? It happens. It happens. We got to understand that, right? This skill right here is a life-changing skill. Anything worth having takes time, right? It takes time to learn. It takes time to hit that $1 million. We're not going to get it in one day. There's no need to be greedy in order to get there, right? And if you need something to relate it to, like to put it into comparison, a Toyota takes 13 hours to build, right? But a Rolls Royce, a Phantom, a Ghost takes 6 months. So good things take time. And so do good Forex returns. If y'all want to be that millionaire, it takes time. It's not something that you're going to learn your first month of trading, right? I'm not a millionaire trader, and I have no problem saying it. I'm not. But I'm going to be, and I feel like you guys are going to be too. It's just a matter of time. So that trader's mindset is something that's huge, right? And in order to help you guys with that, it's best to have a trading plan. It's best to have a trading journal, and it's best to know exactly what you need to get from the markets. So right now, I'm going to drop in the chat a trading journal app that you guys can download free from the App Store. Everybody on this chat should have this app. And if you're getting into a trade, you should be taking a screenshot and putting the information. Why are you getting into that trade? If you got the trade from somebody else, who you got it from? And let's start tracking them, because they can fail to hit on one trade or on two trades. But if they're failing to hit on 50% on their trades, now that's something, now we gotta, make some adjustments to how we're trading, their signals, right? We gotta find the educators that work best for us. We gotta find the trading strategies that are working best for us. Within this app, you can say if you've seen a double top, if you've seen divergence, if you've seen a bullish or bearish flag. And as them confirmations stack up, now you have a history to go back on. Remember, guys, whatever you track grows. So it's best to have, that log. So 5 quotes or 6 quotes, because you just got one, any trade can lose. That's a fact. 5 quotes that you can recite time and time again to keep that positive mental attitude when it comes to trading, right? You want to say trade smart, not often. Trade smart, not often. You don't want to just be entering the markets just to enter the markets. You don't want to be in a trade just to say, oh, I'm in a trade, right? Trade smart, not often. Every day is not a trading day. Sometimes there's no setup in the market. There's no need to force a setup, right? In basketball, if there's no shot, pass the ball around. Eat up some shot clock. Wait for that shot setup to pop up. It's all about the pips, not the money, right? Some of us get upset because we're making $2 because we're trading 0.01s. That same $2, that's 20 pips. 20 pips on a standard, you're talking 200. 20 pips on 10 standards, you're talking 2,000. So focus on the pips, not the money, at least when you're starting to trade, because you're making very little money, but you're catching pips. And if you get in the habit of catching those pips, I showed you guys a compounding plan yesterday in our training. You can compound your account, and as it grows, your wins are going to be bigger and bigger because your lot sizes are going to be bigger. In these markets, what we do, we're investing. We're not gambling. This isn't a gamble. Like I said, if you want to gamble, go to Mohegan Sun, go to Foxwoods, go to Encore, go to the casino in your state. What we're doing is investing. We're making smart decisions as to how we're going to leverage and multiply our money. He who says he can and he who says he can't are both right. So if you think you can't get that $100,000 account, if you think you're not a good trader, if you think you're not learning, then you're not learning. You're not a good trader, and you're never going to hit that 6-figure trading account. But if you truly believe that you can do it and you truly apply the things that you're learning, it's just a matter of time before you have those results. It all starts in your mindset. It all starts in what you're talking about, how you feel about yourself. Remember, we're part of I Am Mastery Academy, and the reason why the name for this platform is I Am is because that right there is an affirmation. Whatever goes after that is what you believe in yourself. So you can say things like I am stupid, I am ugly, but that's not beneficial. That's not going to push you to be better. I am is a powerful affirmation because whatever comes after is what you truly are. So start saying things like you are powerful. I am a great trader. I am beautiful. I am intelligent. I am capable of doing everything that I put my mind to. Everybody on this call, you guys are God's highest form of creation. You're capable of doing anything you put your mind to. Now, sometimes it might take a little bit longer. For some of us might do it a little bit faster. But at the end of the day, if you stay consistent and you put your mind on a goal and you do everything you need to do in order to achieve that goal, it's just a matter of time before you achieve it. So that's the psychology of trading, something that's very important. Remember, trading is 90% mindset, 10% skill, right? You don't want to be the person, and I'll show you guys an example, right, of fear, where you're getting into a buy right here, right? The trade goes into a little bit of drawdown and you're panicking. You're panicking. You're getting it out of the trade, right? Some people send me screenshots like, yo, bro, I'm down on the trade, and you're down 2 pips. Like, it's 2 pips, bro. You know, like when you enter the market, you're down because the broker, the bank, they need their cut. So anytime you enter a trade, you're going to be negative. Some people hit me up stressing about that they're negative when they just got into the trade. And it's like, bro, that happens. So now you get out of the trade right here, and then the trade goes in the right direction. Because you were scared to lose, now you got out of the trade, and some people are in profit. That's an example of fear. You guys saw the example of greed over here. That's not how you want to trade, right? So having that trading plan, knowing how much you need to get every single day in terms of pips and in terms of money, and staying consistent is going to make you a lot better of a trader. So this brings us to the next point, right? And that's proper risk management. Proper risk management is something that's huge, 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 huge. Like I said earlier, if you want something that's of no risk, walk out your house in a bubble, right? Because there's risk out there. Driving a car, that's risky. Your life is at risk every single day. Now, there's certain things that we do in order to minimize that risk. Wearing a seatbelt, stopping at red lights, driving the speed limit. That's all proper risk management when it comes to driving. So now, same thing, we have proper risk management when it comes to trading as well, because you don't want to blow your account in one trade. You don't want to leverage all the money that you have. You don't want to go all in on black and then it hits red, because you're going to be upset. And that might be the one reason why you quit trading. Why you say, man, this isn't for me. Why you start doubting yourself. Remember, somebody who's 80% accurate as a trader still can lose 20% of trades, or 20 trades in a row, I should say. Damn, the Nationals are up 5-2. Sheesh. Damn, my fault. I just updated this baseball game. That's crazy. All right, so somebody's microphone. I just unmuted you guys. You guys can unmute yourself at any time or write down in the chat. Not quitting, but not giving up. Exactly. Never quit, never give up. It's like my guy Dwayne Wade used to say, fall down 8 times, stand up 10, right? You're going to take losses. Think of this. If you gave up after taking a loss, you guys wouldn't be walking today, because as babies, we all fell before we took that first step. If you guys gave up because you failed at something, right, you wouldn't be doing a lot of the things you do today, because we've all failed at something. So proper risk management, right? Somebody who's 80%, an 80% trader, accurate trader can lose 20 trades in a row and then win 80, right? So if you don't have proper risk management, you're not going to make it out of those 20 consecutive losses. I know traders who are 30% accurate who are still profitable in the markets. I've never met, but I've heard of traders who are less than 5% accurate, meaning out of 100 trades, you lose 95 of them, 95 hit stop loss, but you're still profitable trading in the markets. That's all attributed to proper risk management and having proper risk to reward ratios. Right? So your risk to reward ratio, and I'll show you guys right here. If you guys use a long or a short position, pretty much what we're saying is if you're winning more than you're losing, then you can lose more often. For example, right? Let's say your risk to reward is 2-1. 2-1. Meaning you're risking 1 to win 2. That means if you lose 2 times and you win once, you're breaking even. So if your winning rate is 33%, you're breaking even at a 2-1 risk to reward. If your risk to reward is 3-1, right? 3-1. Now you're risking 10 pips to win 30, right? Then that means you can lose 3 times and win once. You can be 25% accurate. You can be right 1 out of 4 times and still not be a losing trader, still break even. And then as you increase this to higher and higher levels, let's say 4-1, 4-1, that means you can lose 4 trades and just win 1, lose 4 out of 5. You could be a 20% accurate trader and still break even. That means if you win 1 out of 4 trades, you're profitable. This is having proper risk to reward. And it's just a matter of analyzing your trade setups and seeing how much you're risking versus how much you're winning and staying consistent with it. If you consistently win more than you lose, it's not about 50-50. You can be less than 1-1 and still be good. But now the problem is a lot of us, instead of trading this way, we're trading this way, where we're losing more than we're winning. Whenever a trade goes into drawdown, we're holding it and we're saying, nah, it's going to come back up. It's going to come back up. It's going to come back up until it hits our stop loss. But if we have a trade that goes into profit, we're closing it quick because we're scared and we don't want to lose the profits. That's not a formula to success. That's not going to lead you to profits long term, right? And all of that again begins with your mindset. It begins with where your head's at. This is chasing profits, not trying to take a loss, holding it as much as possible, looking for that reversal and just losing more and more and more and more, right? This isn't a formula to success. So having that proper trading plan, having that proper risk management is going to help you, right? So this goes on risk to reward. Now let me talk to you guys about proper risk management. I think that was honestly me. Kiara, I'm sorry for your loss, but we're getting better. We're getting better, and we're gonna get better, and it's not gonna happen. You know, so an app that I used as a beginner when I first started to kind of calculate my risk management is Lot Management Pro. For you guys who have an Android phone, I'm sorry, I have an iPhone. Get a new phone. No, sir. You can look it up in your app store. You might be able to find something. Just put risk management app for Forex. You can even Google it. But Lot Management Pro is the app that I use. Now I'm at a point where I can just see the numbers and I can pretty much calculate it. But this is going to help you guys a lot. So pretty much when you open the app, it's going to ask you your account size, how much money you have. Let's say $100, something light. It's going to ask you what risk you want to have. What's your risk percentage? We shouldn't be losing or risking more than 3%. 3% risk per trade, right? If you're risking 3% per trade, you're guaranteeing that you can at least take about 30 L's in a row. before your account starts, getting hurt. 3% risk in $100, that means you shouldn't be losing more than $3 per trade. This is proper risk management. Now, depending on how far your stop loss is, then you can play around with leverage and play with your lot size. Let's say we have a 30 pip stop loss. Then that means you should be trading a 0.01. A 0.01 lot size. And for those of you guys who don't know what lot size is, send me a private message. We need to do a one-on-one. You need to know this information, right? So a 0.01 lot size means you're trading 10 cents per pip or 10 cents per movement. If your stop loss is 30 movements away, 30 pips away, that means you're risking $3 on a $100 account. So if you set that 30 pip stop loss with a 3% risk percentage, it's going to tell you the lot size that you should be using is a 0.01. Now, if you have a tighter stop loss and you can play with leverage, let's say you have a 10 pip stop loss, you can use a 0.03. Now you're playing with leverage. You're playing with the tools and the resources that are at your disposal. You're taking advantage of everything. So the app Lot Management Pro is something that I definitely use to help me calculate that proper risk management, to help me set that. And even if you're doing 3% risk, you can still be profitable in the markets, right? It's just a matter of using that lot size, always having a stop loss, always having a stop loss. You don't want to trade without it, because if you trade without it and you fall asleep or your phone dies, there's nothing like being in a trade. You have no stop loss or take profit and your phone is dead. And then on top of that, you're over leveraging. You have a high lot size. Oh man, you ain't never seen somebody look for a charger so fast than somebody who has a couple racks in their account and they're in a trade with no stop loss. But as a beginner, you don't want to do that. And even as somebody who's been trading, you don't want to do that. It's not a correct method for success. So that's what proper risk management is. If you guys have any questions, you guys are more than welcome to drop them in the chat. If you guys are getting some value out of today's team training, drop some ones in the chat. Let me see some fires. Let me see some emojis. Let me feel the energy. You guys are there. Melanie, I appreciate you hopping on today. Kiara, I appreciate you hopping on today. Anybody else getting some value today? Just 2 people feeling me. Just 2 people taking into consideration the psychology of trading, proper risk management. Yvette, I see you. Jay, I see you. Chairman Jay Phillips in the building. Priscilla, Jomar, I appreciate you guys. Thank you, Ben. I see you. All right. So now we're going to move on to the next topic. And the next topic is the moving average strategy. This moving average strategy, this is something that can pay you a lot of money. All it takes is having patience, waiting for those moving average crosses. And when they cross, taking them. Like if you had no problem. So let me pull out my notebook right now. This strategy was taught to me by Lesaldo Tavares. Lesaldo Tavares is an educator on our platform. He's actually the creator of Gold Cup. Gold Cup just came out a year ago. It's an application from one of our educators. Pretty much when Gold Cup came out, the first stop on the Gold Cup tour was Boston. Me and Lisaldo, we have a very good friendship. In the time I've been a part of this platform, I've seen him grow immensely to the point where now, through his trading profits, through his app, through his Chairman 25 check, he's bringing in close to $100,000 a month. No income claims. His results are different from yours, but he trades a very simple strategy, right? He calls this trading for dummies. And his teacup strategy is very simple. He says a D student can learn it. His moving average strategy, he says even an F student can learn it. Meaning somebody who isn't that good in school, right? So my fault if I seem distracted. I'm just looking for the page in my notebook that breaks down everything that Mr. Lisaldo Tavares says about his strategy, right? So So moving average strategy, right? Is the 4 and the 50 moving average. So I'm going to go ahead and highlight these. The 4 moving average is the red line that's on my chart right now. And the 50 exponential moving average is the green line. So before I get into the strategy, let me tell you guys a little bit more about moving averages. For those of you guys who haven't made it through the academy, who basically have no idea what these lines are. When you put a moving average, it's pretty much taken into consideration the last candlesticks, right? So when I choose the 4 moving average, I'm picking the last 4 candlesticks, 1, 2, 3, 4, perfect right here. And I'm plotting a point around the average price. If I grab the 50 moving average, that means I'm grabbing the last 50 candlesticks and plotting a point right in the middle, or right, where the average is. The difference between a moving average and an exponential moving averages weigh every candlestick the same. So it's just plotting a point right where the average is. An exponential moving average is taking or is weighing the last candlesticks, the last, let's say 5 out of the 50, the last 10 out of the 50 with higher weight than the previous 50, right? If that doesn't make sense, say that in the chat and I'll break it down a different way. So pretty much what we're using these moving averages for is to figure out which way the markets are trending. And if we go with the trend, remember market structure from yesterday, if you carry a trend and you keep it going, you're going to see more and more profits. Think of, catching a whole swing, right? So what these moving averages are going to show us is in which way it's trending. So to put it into layman's terms, right? Let's say we're selling phones. And for the last month, we've been selling 2 phones a day. Now, our average for the last, or let's say 50 days, is 2 phones per day. But now, over the next 3 days, we're going to see a surge in sales. Now, instead of selling 2 phones a day, we're selling 5. So our 4 moving average is going to be spiking upwards. Whereas our 50 moving average is going to be a little bit more stagnant because it's going to take it time for the average to catch up. But because we see a cross from the 4 moving average going upwards, meaning we're selling more phones over the last couple days, now we can say with good confidence we're trending upwards. Or vice versa. If we've been selling a lot for the past 50 days, and over the last 4 days we haven't sold much, we're going to see a cross to the downside. And that's going to give us indication that it's going the opposite way. So pretty much what we want to do, and before I actually show you guys on the chart, is we're going to see a line. And this right here, right? Let's call this the 50, or let's call that the 4. And I'm just going to use red, just to use red, right? And then the next one, straight, let's call this the 50, right? So pretty much whenever you see the 4 cross the 50 on the way up, 4 cross, 4 cross 50 on way up, you want to buy, right? So whenever the 4 crosses the 50 on the way up, you want to look for buying opportunities. You want to buy by market, right? Whenever the 4, whoa, my fault, guys. Let me erase this. Whenever the 4 cross, what the fuck? All right. Whenever the 4 crosses the 50 on the way down, you want to look for sells. This goes hand in hand with market structure. Our training from yesterday. Can I see your laptop charger? Our training from yesterday. Because if the market is trending upwards, we're looking for buys. If the market is trending downwards, then we're looking for sells, right? So hold on, I'm just putting this computer to charge. You guys can see my screen. It was about to die. So whenever it crosses it on the way down, you want to start looking for sells, right? Typically what you're going to do is whenever you find a cross, either on the way up or on the way down, you're going to put your stop loss at 20 pips below the crossing. So whenever it crosses, you're going to put your stop loss 20 pips below the cross. So if we're on a buy right here, right, after it crosses on the way up, what we want to do is place our stop loss at 20 pips. 20 pips right here. Close enough, right? So our stop loss is going to be 20 pips away from the price or the point where price crossed. On the way down, same thing. If price crosses on the way down, this time we're looking for sells, right? We're gonna, damn, this is mad big. We're gonna place our stop loss at about 20 pips after the price cross. So we're getting in on buys when the 4 crosses the 50 on the way up with a 20 pip stop loss, and we're getting in on sells whenever the 4 crosses the 50 on the way down, again with a 20 pip stop loss. Now, depending on what time frame it is where we see the cross, we're going to look for different amounts of pips, or we're going to expect different types of movements, right? So if you see the cross on the 1 hour time frame, you're looking for a 30 pip TP. So this means that 30 pip take profit, 20 pip stop loss. That means if you're wrong 3 times, you need to be right twice in order to break even. So now you can be a less than 50% profitable trader and still be profitable. 50% accurate trader and still be profitable. If you see something on the 4 hour, you're looking for 60 pip take profit. And then if you're looking for something on the daily, or if you see a cross on the daily, you're looking for 100 pips take profit. On all of these, once you're 15 pips in profit, move your stop loss in profit and start trailing your take profits. The reason being is on the 1 hour, you can expect 100 pip move after a moving average cross. On the 4 hour, you can expect a 200 pip move. And then on the daily, you can expect a 400 pip move. Right? It wouldn't be out of this world. So remember, you don't want to be scared. Move your stop loss into profit. So great question, Kiara, right? I appreciate you for asking that. So at any time when you're in a trade, you can modify your trade and change your stop loss or change your take profit. So what I mean by move your stop loss into profit is, let's say we were to get into a trade right here, right? This is our entry. I'm going to put this blue. Our stop loss on a buy is going to be down there. And then our take profits are going to be up here, right? Because we're looking for a buy. So, there's only one take profit. So as the trade moves into profit, right? Let's say it's going up. You can move your stop loss from down here to break even or even into profits. So now if price does this and it reverses, you secured this many pips. You secured this many pips. And you can move this as many times as you want. You can move it up, you can move it down as many times as you want. They don't charge you or anything like that. So this is what I mean by moving it into profits. If you're in a trade right now, most of us should be in a trade because I just called the AJ sell a little while ago, right? If you press and hold it under trade and hit modify, it'll allow you to change your trade. Boom, lit. I see. I can tell you figured it out. Darian, you got it? Fire. That's lit. So, yeah, so don't be scared about taking this. You're only risking 20 pips. 20 pips isn't a lot, right? 20 pips, if the trade doesn't hit, it doesn't hit. Remember what we said earlier, any trade can lose. But this strategy, if you take it with consistency, you can lose more trades than you win, and you can still be profitable long term. And it's a very easy strategy to start applying to your charts. All it takes is this moving average cross and patience. Patience is the biggest thing with this strategy, especially if you're looking at the higher time frames, right? So now let me show you guys on the chart exactly what the strategy is, right? So I'm not even going to move it. We're going to start from the left side and we're going to move to the right. And we're going to look for moving average crosses, right? This is AUDJPY. The reason why I'm in this chart right now is because I just got into a sell right before this trade happened. If you got into it, I'm down 2 pips. So I'm in the negative 2 pips. That's my spread. My stop loss is 30 pips away. And my take profit is about 65 pips. So with that risk to reward, remember, I only need to be right 1 out of 2 times. If I'm right 1 out of 3 times, if I'm right 1 out of 3 times, I'm breaking even. If I'm right 2 out of 3 times, I'm in profit. If I'm right 3 out of 3 times, is lit, right? So right now we're down the spread, but we're looking forward to seeing this drop at some point. So starting from up here, right? Let's count moving average crosses. The 4 crosses the 50 on the way up right here. From the point it crosses, if we were to get into the trade, we're looking at about 180 pips, right? That's a good, because if we're on the daily time frame and we see a moving average cross, we're looking for 100 pip take profit. This hit our take profit. Second time, the 4 moving average. Got a question? Got a question? No question. I just muted your microphone. You can unmute yourself at any time. The 4, the red one, crosses the 50 right here again. So from the point it crosses, let's say it crosses right here, right? You see, well, no, it crosses right at this candle, right? If we were to take this down, this is still going down. This is a 920 pip move, right? Let's say you take it a little bit later, right? You take it after this little pullback right here. Let's say this little pullback right here. 873 pips. This pullback is about a 50 pip pullback, right? So maybe you got into this late, you hesitated on it, and you got into it at this candle, right? If you got into it at the start of this candle, it may have hit your stop loss, your 20 pip stop loss. It may have hit your stop loss, so you took a L. But as you can see, the 4 is still trending under the 50, so you can look for re-entry positions. Right? Let me see. Somebody wrote a question in the chat. Yo, G had the watch list on the screen. Boom. That's better. So let's keep looking for moving average crosses. It comes close right here, but it doesn't break. It doesn't break the move. It doesn't break the. See, it comes very close, but it doesn't break. This is where patience. We don't want to get into this buy prematurely. Price comes back, crosses right over here. From the point it crosses, we're right there, 90 pips, right? We're right around 100 pip take profit. Remember, once you're 15 pips in profit, you're moving your stop loss to break even. Once you're more pips in profit, you're trailing your stop loss. So at a minimum, you're catching 50 pips on this trade at a minimum once it reverses, right? Price crosses right here again. Let's say we take it from here, from the top, 165 pips, it hit our take profit. Let's say we hesitate on it. Maybe it hits our stop loss, but it goes down another 100 pips. We're seeing a bunch of rejections. Moving averages, they also serve as trend lines or as like support and resistance. So we're seeing, do you wait for engulfing JCP? I love it. I love it. You can. That's going to give you an extra confirmation. It's going to give you extra confirmation to get into the trade. Yeah. The best thing is when you have multiple confirmations. Let's say you have an engulfing candle, like you mentioned. Maybe your RSI is oversold or overbought. You're also seeing divergence. So as you have more confirmations, you can get into the trade with more confidence that you're not going to see drawdown. Say over here, price crosses again. We're 166 pips. Let's say we hesitate on it and the cross happened here. So that means we get into it on this candle. Maybe it hits your stop loss. Maybe it doesn't. If it doesn't, you hit 145 pips. If it does, then you look for a re-entry after the price comes back up. Soon as it hits your stop loss and you see this rejection, this is rejecting down here, that's giving you confirmations to re-enter this trade, right? Somebody give me a currency pair, any currency pair. Drop your favorite currency pair in the chat. What's your favorite currency pair? GU. Damn, Chairman J Phillips. He was a little late on it with GJ. USD CAD, I see y'all. Yvette got the fingers. She put that up quick. So GBP USD. Appreciate all you guys. Let's look at GU. Damn, y'all still going, huh? We're going to look at a couple of these. We're going to look at 3 of them, right? We're going to look at GJ, just because I love GJ. A couple of y'all said it. And then we're going to look at UCAD as well, because a couple of you guys said UCAD. But let's take a look. GU on the daily time frame. Let's put it from right here, right? Price crosses the 4, crosses the 50 up here. Crossed it right here. This is beautiful. Pretty hard crossed it right here. And ever since that cross, let's say you got out here when it crossed it on the way up again. There's 1,000 pips. 1,000 pips in 141 days. That's 4 months you're holding this trade. 5 months you're holding this trade for 1,000 pips. That's beautiful. That swap fee is going to be crazy. Right? So price crosses on the way down right here. Sell opportunity. We get into it. From the time it crosses, let's say, I'm going to zoom in on it real tight. It crosses right here, right in between these 2 candlesticks. So let's say it crosses here. We get in at the end of this candlestick. 18 pips. It comes close to our stop loss. It doesn't hit it, but it gives you 50 on the next candle. And then it goes. If you're trailing your stop loss on this, moving it down as it goes, this is profits all the way. All right, let's see. Moving average cross right here, right on this candlestick. Candle closes right here. Let's say we get in here. Doesn't hit our stop loss, comes very close. It's about a 17 pip wick, so it comes close to our stop loss, and then we're riding it, 250 pips up. Right? Next cross right over here, right on this candle. Price opens here. Price closes here. Let's say we get in open right after it closed. Right? We're not hitting our 20 pip stop loss, and price is going down 100 pips. Let's say we get in here on the close. This one probably hit our stop loss. Yeah, that one probably hit our stop loss. If it didn't, it went up. But this one probably hit our stop loss. Off the rejection, though, maybe you get in a second time and you ride it into profits. Who knows? If you have a question, I'll take it. If not, just please mute your microphone. This one right here doesn't hit our stop loss, 17 pip wick after the cross right here. And we ride it down to the bottom, 375 pips. 375 pips can change your life. Do you trade multiple strategies? No, I trade my strategy. So boom, price crosses here. We have our 100 pips, very minimal drawdown. My strategy is composed of several different things. I mean, I look for different things when I'm looking for my trades. A 450 moving average cross is not something that I rely solely on. It's a strategy, but it's something that I look out for. So within my strategy, if I see a 450 moving average cross, that's giving me an extra confirmation to enter that trade. So whereas I don't take this as a sole strategy for myself, I do take it as a confirmation to enter trades. I don't know if that answers your question. If that's more like the answer that you was looking for. So boom, cross right over here. This one may have hit our stop loss as well, twice before rising up. But you guys see the picture though. You know, typically anytime we see a moving average cross, we're seeing momentum going towards that direction for at least 100 pips. And some of them we get drawback over 20 pips. But remember, if you have a 20 pip stop loss and 100 pip take profit, that means that, damn, the Nationals won, bro. That's crazy. If you guys have a 100 pip take profit and a 20 pip stop loss, that means if you lose 5 times and win once, you're breaking even. So that's about a 17% winning rate. Baseball, Tizzy, I feel you. I feel you. My brother-in-law just made a big bet though on the Astros ending it today. So that's why I was paying attention to the game, because I know he would have made a lot of money if they won, but he lost a lot of money because they did it. So it sucks for him. He should be trading. Right? So boom. So yeah. So we see it's gonna move and it's gonna go. And that's just giving us indication that price is gonna go in a certain direction. We don't gamble, facts, we trade. So start using the 4 and the 50 moving average. It doesn't just have to be on the daily time frame. Remember, on the 1 hour, look for 30 pips on a 20 pip stop loss. On a 4 hour, look for 60 pips on a 20 pip stop loss. On a daily time frame, look for 100 pips on a 20 pip stop loss. Once you're 15 pips in profit, move your stop loss to break even. And as you go 30 pips and more than 30 pips into profit, start trailing that stop loss to secure profits. You guys have any questions on any of that, drop it in the chat. I hope that 4 and the 50 moving average strategy made sense to you guys, right? I said I was going to go over UCAD and GJ, right? Take a look at UCAD. Nah, I was on the 4 hour. I'm just following up on this trade setup that I sent last week, where I had this inverted teacup right here, right? Those of you guys that are in the chat, look at this. Look at that. Take profit, smash on the wick, and you could have caught it for the buy right after the inverted teacup. We not playing with them. We not playing with them. Right? Simple stuff. We called this trade last week, last Sunday. It was like up here somewhere when we called it. Look how much it's dropped. And we called it straight to the line, and we was expecting a bounce off of it. And look, broke structure, higher, high, lower, high, lower high, lower low, lower high, lower low, lower high, lower low, higher high. Y'all see that? This is a higher high. So now we're looking for a swing to the upside. We're looking for it to fill all this momentum right here. So we should be expecting a move to the upside right now on UCAP. This was beautiful. That hit beautiful. So now going back to the 4 in the 50 moving average, right? 4 crosses the 50 right here. Sell opportunities, right? From the point it crosses right here. If you got in here, it probably, no, it didn't hit your stop. 20 pips, didn't hit your stop. Gave you other opportunities to enter the trade on the drawdown, and then dropped 240 pips. That's fire. On the 4 hour, we're only looking for 60 pips, right? Let's say we caught it right here, crossed on this candlestick. We're taking it up 94 pips. If we caught it up here, it still didn't hit our 20 pips, but it didn't hit our 60. So this would have stopped us in profit, maybe like 20 pips or so. So I would have been popping. This right here is a nice little fake out. Bearish engulfing, so you get out of that trade quick. Right? Right here, we have a consolidating market. It's just moving sideways. So that's why you see the 4 crossing the 50 multiple times. Just we're waiting for this consolidation period to break. Right? So these, you might get into the trade, but it might be giving you a little hesitation, right? You might not even hit your stop loss. It's just playing around. This one hit your stop. You got in here, but once you've seen it cross up, you would have been getting out because now it's bullish momentum. So you would have gotten out break even there. Here, this is about 40 pips. You would have been stopped out in profits. When it crossed on the way down, it gave you 20 pips before going up. So you would have been stopped out break even. When it crossed up, see, this is all consolidating market. So it's just playing around. But it's either breaking even, it's hitting your stop loss, or it's stopping you out in profit on all those trades. Right here, you have a cross, no drawdown. Trade goes up, gives you your 60 pips. Right here, you have a cross. Let's say you get in right here after the candle closes. It doesn't hit your 20 pip stop loss. Goes down about 100 pips, hits your take profit. Let's say we catch it right here, right after the candle closes. It's hitting our, we're breaking even on this one. It doesn't go down 20 pips, but it climbs up 20. Remember, once you're 15 pips in profit, you're going to move your stop loss to break even. So on this candle, you would have broke even. All right, let's go back. We'll do 3 more. So right here, this one hits. Oh, wait, hold on. If you caught it right here, it hit your stop. If you caught it right here, it didn't hit your stop, but it hit your take profit. This is a ill misdirection. And then let's say we caught it right here. This is hitting our take profit for sure. On this way down, this one is hitting, we're breaking even on this one. 18 pips. We're moving our stop loss and profit. So that's UCAD. And then let me look at GJ real quick. This works for any pair. It doesn't matter what it is. Crossed it right here. No drawdown. Hit our take profit. 700 pips after this cross right here. We took it from the cross. This is 900 pips. Sheesh. I wish I was still in this trade. This is the trade I called out in the TradeblazersFx chat a couple weeks ago when we got the buy off the bullish flag pattern, 61.8 retracement. There's divergence around here as well. Smacked all 3 take profits. Moving average crossed up on it though, giving us extra confirmation to enter this trade. Where's my moving average at? Right here. Crossed down. We took it here, it hit our stop loss. We took it on the cross, we broke even on the way down. Here, it went to take profit, no drawdown. Here, I gotta zoom in just to see a little bit better. What I'm doing right now is we're back testing this strategy. We're going back and actually seeing if it works. So whenever you guys learn a strategy, whether it's the triple fire strategy, the teacup strategy, go on the charts and find the setups and back test it and train your eyes so that you're able to see these setups as they're happening, right? Let me see, somebody wrote in the chat. What's the time frame to pip TPSL? I got you right now. What was that first pair that I was trading? That I was on? Was it UCAD? Who knows what was that first? No, it was the trade that I was in. AJ. There it is. Take a screenshot of this right here. 4 crosses the 50 on the way up, buy. 4 crosses it on the way down, sell. Stop loss is 20 pips below the crossing on whatever time frame. And then these are your take profit zones. 30 pip TP for 1 hour, 60 pip TP for 4 hour, 100 pip TP for daily. And you can, don't be surprised if you see a move of that many pips. So take that screenshot. Take that screenshot. You guys have any questions? Any questions in the chat right now? Anybody have any thoughts, any concerns? If you guys are getting value out of today's team training, drop some ones in the chat. If you guys want to see them happening more often, if you guys are super appreciative for what we're doing today, drop some ones in the chat. I appreciate all you guys. All these ones just make me happy, and they just make me want to do these more and more and more and more and more and more and more. So finally know what back testing is. So yeah, we're doing this. We're doing this, and we're gonna do these calls every single day. And I want you guys to truly understand how to trade and how to build a business. I want you guys to be successful with this. So I'm dedicating myself to doing more and more of these. And with time, if you guys have any requests, anything you'd like to see on these calls, just send me a message and I'll make it happen. So the high pips we looking, so the higher the pips we looking at, yeah, simply because when you're looking on the higher time frames, you're looking at bigger moves. So it only makes sense that you're looking for more pips. Yo, and always record them, bro. My fault. It's just that click of the button, and sometimes I forget, and then I be 30 minutes into the training, but I'm gonna do a lot better recording them going forward. I appreciate you. So that's the moving average strategy. Next thing I wanted to go over with you guys, we're about an hour and 15 minutes into this training. We have another 30 minutes to go, but will it still be with the 4 and the 50? Yeah, still be the 4 and the 50. Pretty much what the different time frames are, right? Let me break it down to you a little bit so you understand, right? Let's say if we're on the 15-minute time frame. That means each candlestick is 15 minutes long. If I were to switch from the 15-minute to the 1 hour, that just means that 4 candlesticks, because there's 4 15 minutes in an hour, are gonna make up 1 candle on the 1 hour, right? If I'm switching from the 1 hour to the 4 hour, that means that 4 of these candles are making 1 4-hour candle, this candle right here. If I'm switching from the 4 hour to the daily, again, that's 6 candles. 6 candles are making a daily candle. How can I add the 4 and the 50 lines on your MetaTrader app? If you go on your MetaTrader 4, go into chart, press the F that's on the top. On main window, click main window and go to moving average. Where it says period, you're gonna make it 4. And then for the 50, make it 50. And then where it says method, instead of simple, it has to be exponential. And then if you're on trading view, it's right here under indicators. You just write moving average. Smooth. Any other questions? Wow. GBP NZD, man. Was this GBP news today? Do any of you guys know? Because, man, look at this. And it came back and did a full retracement. My stop loss is like right here. It came so close. Look, this is another perfect example of fear, right? I got into this trade right here. No, I lied. I got into this trade right here after the bullish engulfing closed. I was in profit and then it reversed. My stop loss is at the psychological level, 2.0200. Look how close it came to my stop loss. One, if I had over leveraged, my account would have been blown. Two, if I had gotten scared because I was down, I would have never reaped this benefits. Like now I'm close to break even. I'm still down on the trade, but I'm not as down as I was before. Right? Like shit, I was down 60 pips. Wow. Now I'm down 4. Right? Simply because I stayed with my feeling. Like I knew that I was okay losing the 60 pips based on my lot size. So if it hit stop loss, cool. So now why close it? Because it's in drawdown. I'm gonna let it run. And right now it's close to take profit. So if we do a higher pip, we can do a higher lot size for a higher profit. You can do a higher lot size on anything for a higher profit. It doesn't have to necessarily be higher pips, right? But if you're looking for more pips, that just means you can use a lower lot size and still see profits. But anything, it can be 10 pips. And if you have a higher lot size, you're going to see more profits. So it's not necessarily just because it's higher pips. If that makes sense. So now JCP, right? So the first thing I did when I started trading Forex was I printed out a piece of paper that had all the different candlestick patterns on it. And I laminated it, or I did a hood lamination. I grabbed clear tape and I put it on both sides. And what I used to do is I used to go into work, sit in the back of my store, and look for these candlestick patterns. Right? So I just sent the Japanese candlestick pattern app in the chat for you guys. And then I'm going to send out the website that I actually printed out. So you guys have best of both worlds. Somebody said Forex was a scam. I said, how? If there's an app for that. How is Forex a scam if there's an emoji for that? There's a Forex emoji. It's my favorite emoji right there. Right? So that's the app that I used. Let me see. I'm going to show you guys the website. Boom. If you guys can see this highly reliable bearish patterns, drop a 2 in the chat box for me. If you guys can see that. Drop a 2 in the chat box if you can see that. I appreciate you guys. Thank you. So these are another confirmation right here to enter the markets, right? So we use market structure, support resistance trend lines. We use Fibonacci. We've gone over divergence. We've gone over the 4 and the 50 moving average. We're going over different confirmations that when you guys put together are going to give you clean bias as to when to enter the markets, right? So after you see a candlestick pattern, that's like the final confirmation to enter, to go in, right? So there's different kinds. There's highly reliable ones that you're not going to see as often, but you see evening stars a lot and evening doji stars. There's going to be moderately reliable ones, and there's going to be both bullish and bearish ones. So bullish meaning buys or up, bearish meaning sell or SACA, Saka. What's that? I don't know what that is. SACA. What is that? Yeah, I said that. I don't know what that is. All right, so boom. Let me see, somebody else wrote. Yeah, I don't know what that is. So boom. Some of my favorites, right? Morning star and evening stars. Morning stars are bullish, evening stars are bearish, right? Meaning evening stars are indicating a downtrending market. Morning stars are indicating an uptrending market. And I love bullish and bearish engulfing patterns. And engulfing right here, this is a bullish engulfing where the bullish candle is bigger than your bearish candle. So that's an engulfing. So now I'm going to take a time to actually show you guys these on the charts. Right? So let's pull up trading view. My phone, I'm just looking for it. My fault, guys. I'm just having trouble with this. Damn, somebody dropped off. Wow. Shouts to him, whoever that was. Wow. So now let me show you guys, right? This is a bullish engulfing right here. Bullish engulfing. And the cool thing about this specific bullish engulfing candlestick right here is, you guys notice, this is structure, right? This is a structure area where you have a lot of support. You have a lot of rejection right here. Price broke this area, came back up, retested, was giving you indication. This is an evening star, evening doji star, right? If we go back to our candlestick patterns, it's an evening doji star. So it's indicating downwards movement. But then the bullish engulfing happened right after. Bullish engulfing broke straight through that zone. So this is giving you indication of a bullish market. Price came back down, retested this area before taking off and giving you another bullish engulfing right here. There's a bearish engulfing. So even if you took this for a sell right after it, you're up 25 pips, right? This bearish engulfing went straight to this support zone. So once you started seeing that breakout and price breaking through the bottom, not making a move to the top, it gave you a little fake out, but it didn't really give you bullish momentum. Now you're looking for sells on this market after the bearish engulfing candlestick. Same thing over here. Price broke, bullish engulfing. This is giving you indication of a bullish market. So even if you took it in right here, right after the bullish engulfing candlestick pattern, you're looking at 12 pip drawdown right back to this zone. This is giving you another entry. This is a pullback, another entry to take it to the top. Now me, I like looking for my candlestick patterns on the higher time frame, just because I do all of my analysis on higher time frame. Very, very rarely am I looking at a 15-minute time frame, simply because I like moves on higher time frames. Let me show you guys. bullish engulfing right here, right? So you have your bearish candle, and then you have a bullish candle that's bigger than the bearish candle. And there's a whole bunch of different candlestick patterns. You're going to find the ones that you see most easily. The reason why I like bullish and bearish engulfings, morning and evening stars, dojis, is because they're easy for my eyes and I just spot them, right? If you know, if you watch Jesus Nunez, Holy Pips, he's part of Gold Cup. A bearish engulfing candlestick coming out of an oversold market is what gives you the indication to enter that trade for a sell. Or a bullish engulfing candlestick pattern, bullish engulfing like here, coming out of an oversold market is giving you an indication to take this for a buy. So some of you guys, whoever doesn't know the holy pullback strategy, I'm actually going to put up a little video. Shouts to my guy Jomar for recording this with me in one of our team trainings. If you guys still have questions on it, or you want me to do a whole training dedicated to that strategy, I'm more than happy to do it. And then to answer Ben's question from earlier, you see that's a strategy that he uses. But for me, I use it as a means of a confirmation to add to my confluence because I know his strategy works. So now if I add it, and I implement it in some of the things that I look for, then it's only going to bring good results. So boom. That was JCP. Print out one of those papers, laminate it, put some clear tape, right? Download the app on your phone and start training your eyes to see these candlestick patterns because they're going to give you more confirmation to actually enter these charts or enter these trades. So that's pretty much it on the trading side. The next thing I wanted to get into was more for mindset. We all know that trading, mindset is a big part of trading. So this still implies and it still is going to help you. But what I wanted to talk about next was your daily habits, and rituals. Your decisions over the last 5 years have gotten you to where you are now. Your decisions every day and the things you do are going to set you up to who you're going to be in the future. With this business is not about doing something a lot one day and never doing it again, or doing it, every 5 days, every week, every 2 weeks. It's more about consistently doing something. When somebody joins this organization, with me, I always ask, how much time can you commit to this business? Whether on a daily level, on a weekly level, on a monthly level. Keep in mind your boyfriend, your girlfriend, your job, the gym, whatever it is that you do, how much time can you realistically dedicate to this? Most people say they can dedicate an hour or two a day, right? Whether it's an hour before work, an hour after work, 2 hours after work, whatever the case is. Now, the question is, what are you going to be doing during those 2 hours that's going to effectively grow your business? So I'm going to move this chart down a little bit. And my mentor, Darwin Lopez, talks about this, our daily habits and our daily rituals. We should be getting into the habit of, one, listening to personal development. Personal development every single day is going to strengthen your mindset, is going to strengthen, how you're looking at the charts, how you're thinking about things, and it's going to make you better as a person. People that you can listen to for personal development. You have everybody's mentor, Bob Proctor. Shouts to the guys that went with us to Dallas. We actually got to see him in person. You have Jim Rohn. You have Eric Worre and Eric Thomas, just to name a few. If you guys want any examples of any videos to watch on any of these guys, send me a private message. I'll send you some links. From time to time, we're also putting links in the Trailblazers chat, so make sure to plug into those as they're being given out. What you're doing on social media is huge because it's increasing the people that are watching you, the people that are going to show interest in what it is that you're doing. So on IG, you want to start following 150 people a day. 150 people a day. Follow them. That means 50 to 100 people are going to follow you back. That's a new 50 to 100 people every single day that are now watching what you're doing, that are now, may display interest. And if you're posting interesting stuff, they're going to slide into your DMs and they're going to talk to you. So remember to always be that person of value, that person that's giving back, that person that's making people want to watch what they're doing. Don't just go on your social media just to stand, just to, see what people, like when people go on live and they don't say nothing, that's like a pet peeve of mine. Like I used to go on their thing and just drop foreign exchange emojis just to see what they was going to say. Just because you're on live, you're not talking about nothing. You're just standing there playing video games, rapping this song, like smoking weed, like you're not doing anything productive. And then I unfollow the people, right? So try getting into the habit, or get into the habit of following 150 people a day at a minimum. Number 3, 2 exposures, right? Try to tell 2 new people every single day about your business. That's 10 people a day, 40 people a month. If even 1% of the people see an opportunity, you're getting 4 people started every single month. That's platinum 150. That's you holding your rank, right? So 2 exposures a day. We're doing webinars at 9 p.m., Zoom calls. We do meetings, events in different places. You yourself can invite somebody to your local coffee shop, your house, right? Pop in a go live session and watch it with them. Share the little bit of information that you know, or the lot of information, because if you've gone through basics in I Am Academy, you know a lot more than the average person. You know how foreign exchange works. You know who trades Forex. You can have a conversation with somebody for an hour or two about what it is that you're doing, right? Number 4 is you want to follow up. Take some time every day to follow up with the people who you spoke to. Follow up with the people that are a part of your organization, with the people that have came to meetings, with the people who told you they're not ready, but they're going to be ready on this day, right? Number 5, you want to attend meetings. If there's a meeting going on in your city, you should be there. I used to have to drive 3 hours to get to a meeting, and I used to do it twice a week. Some of us have meetings and events down the street from our homes, and we don't attend. To do what? To be home doing nothing, right? You being at a meeting is gonna create more culture, right? If more of our team members attend meetings, it's gonna be more packed. You're gonna have different stories. You're gonna have different successes. You're gonna hear different struggles. You're gonna meet different people from different background and different places that can relate to the person that somebody brought, right? So now when you bring somebody, you're going to have all these people there showing support for what it is that you're doing. So it's only going to boost the chances of somebody seeing the vision and getting started in your business. Number 6, go live sessions. Attend a go live session every single day, right? A go live meeting you can watch from your phone. It's just a matter of plugging in and listening to what it is that they're saying. Example, when I first started this business, I used to take a shower listening to go live sessions. Not the best thing to say, but I used to drive on my way to work and I had either a go live session or some personal development playing in my radio. Before I went to sleep, I had my phone in my hand. Sometimes I would wake up to my phone hitting my forehead because I fell asleep watching a video. Or sometimes I wake up in the morning and my phone is on my chest because I was watching a go live video. That's taking that little bit of time, that 20 to 30 minutes before going to sleep. And instead of watching Netflix, instead of scrolling through social media, instead of looking up ESPN, you're learning something. And even if you're sleeping through it, is registering in your subconscious mind. And then number 7 is review or chart time. back testing like we just did with the 450 moving average. Train your eyes to be able to see what it is that you're learning on these go live sessions so that you can find it on your own. The time when you're going to be most successful in this business and in any other business in the world is when you can start doing things on your own. And the last thing I'm going to touch on today is the three stages in this business. Stage number one is when you're dependent. You're like a baby. You just started in this business. You don't know how to do a presentation. You don't know how to access the products. You don't know how to, use the resources to make money. You're dependent. At this stage, you got to ask for help. Ask for help as much as possible. Private message people. Call the person who introduced you to this business every day. Be on their backs, right? You're depending on them. You just started in this business. Number two is when you're dependable, right? I'm dependable. If you guys need me, I'm there for you. I have a bunch of people. There's 300 people in the chat who are dependent of me. I'm dependable, right? If you introduce somebody to this business, you have to be dependable. If that person needs a one-on-one call, maybe they're not understanding something, you joined this business before them. So you should know a little bit more than them. If you don't, then you got to hold yourself accountable, right? You're not being dependable. You're not being the CEO of your business. You're not taking full advantage of the products. You're not learning, right? One of the things that made me, understand the foreign exchange market as fast as I did is I had people around me who I can have those conversations with. I started, hosting basic classes 3 months into trading in the foreign exchange market, simply because there was nobody in my city trading. And I wanted to bring this culture, bring this wave to where I lived. So I became dependable real quick. Some of us stayed dependent on other people way too long. Like I said, I started doing events 2 months into this business. I started hosting trainings 3 months into this business. I'm no better than you guys. We have the same resources. On the contrary, you guys have more resources, because when I started, there wasn't as much things on IM. And when I started, like I said, there was nobody in my area trading. So if you have people around you who are trading, you have a leg up. So it's time to start becoming dependable so that you can understand this a lot faster. And number three is independent. So when you're independent, that means you don't rely on anybody else. From month number 2, I became independent. One, because the person who sponsored me, who brought me in this business, Darwin, Chairman 10 at the time, Chairman 100 right now, he was in a different state than me. So I had to drive 3.5 hours just to go see him. Number 2, I had to become independent because there was nobody in my city trading. If I wanted to start something special, I had to become dependable. I had to have people depend on me. I had to start hosting these events, start hosting these trainings, start building this culture. The people who make the most money in this business are the people who become independent. My job is to make you guys independent of me. That's why sometimes I tell you, it doesn't matter if I'm at a meeting for the team. The meeting doesn't revolve around me. You guys are more than capable of hosting your own meetings. You guys are more than capable of hosting your own trainings. Whether it's, yo, we're meeting up at my house to watch Nessa's session. We're all trading binary. That's lit. You can invite a prospect to that. Yo, come see us trade live with one of our mentors. At that point, you're not dependent on somebody. You're being independent. And if you have some people in your organization, you're being dependable to them. You're being a leader, and you're just using the resources that you have at your disposal. Some of us don't have a house where we can invite people. That's cool. There's coffee shops everywhere. Panera Bread, Cafe Nero, Dunkin' Donuts, right? Starbucks. There's colleges all around the city, community centers, places where people can meet up. Worst comes to worst, you can meet up at the mall. Meet me at the food court. I'm going to pull up my laptop in the mall and we're going to watch this session. But there's those that have excuses and there's those that have results. Question is, who are you? Once again, my job is to make you guys independent, not dependent on me. And if you guys agree that that's a good goal, right? That's something that you guys want, that you guys don't want to be dependent on me, drop some ones in the chat. If you guys are getting value, if you guys got value out of today's team training, drop some ones in the chat. If you guys want to see a training tomorrow, an exclusive team training where we're breaking down exactly what it is that we're doing, I want you guys to go in the Trailblazer chat and drop some fires in there. Drop some fires in the chat. Drop some fires in there. That's going to bring today's training to a close. We actually went for an hour, 45 minutes today, which is fire. It's right around what I had for today's training. Just to wrap everything up, we went over the psychology of trading today, the different emotions that we're going to fight that are going to limit us. Those emotions being doubt, fear, revenge, and greed. We all agreed that any trade can lose. Any trade can lose. Any trade can lose. Nothing in this world is guaranteed except for death and taxes. Shouts to my guy Tizzy. We spoke about proper risk management, being a less than 50% accurate trader, but still being profitable through your risk to reward ratio. We spoke about what is proper risk management, and I even gave you guys an app that's going to help you with your calculating your risk management, because we're not all the best at math. I gave you guys a moving average strategy that's been proven to work, and we even back tested it on several different pairs, and you guys saw that it works. Now that you guys have trained your eyes to find it, it's just a matter of patience before you put that into play. We spoke about Japanese candlestick patterns, the JCP app, and the website with the 4 PDFs that I printed and laminated with clear tape and would go back and actually train my eyes to see. We spoke about daily habits and rituals, what we should be doing every single day to build a millionaire business, to build a 7-figure trading account, personal development, following people on social media, telling 2 new people every single day about this business, following up with the people who you told about this business, or who the people who were supposed to come to a meeting or an event or hop on a call. We got to attend meetings and we got to make meetings, right? Build meeting to meeting and meet up with people. Hop on go live sessions every single day. And then put some time on the charts. Kobe didn't make it to the NBA, or he wasn't going to make it if he didn't shoot in the gym. Y'all remember that song? Right? I'm not going to swear, but you wasn't with me shooting in the gym. You wasn't with me on these charts, learning these strategies. Put in that chart time. That grind will never cheat you. Shouts to my man, DeMar Cashed Out. 3 stages in this business. Number 1, you're dependent. Number 2, you're dependable. Number 3, you're independent. The goal is to make everybody independent. You are the CEO of your business. To start acting like it. Future events coming up. We're going to New York City, December 6th and December 7th for the Northeast Regional. And we're going to London. Hey, I just peeped. Tizzy wrote it. Hope everybody here is going to London. February 28th and 29th for convention. We're spending 3 weeks, but you guys are more than welcome to come for 3 days or whatever you guys can. Leverage until you're the one that's being leveraged. That's fire quote right there. Leverage until you're the one getting leveraged, being leveraged. Remember Pam's PS3 system? I'm going to reach out to Pam and see if she wants to do a call soon for you guys, breaking that down. But you guys want to leverage your uplines, leverage your business partners, leverage the people that have been doing this for longer than you until you're the one that's being leveraged. Once again, my name is Gio at East Coast G. It's been my pleasure talking to you guys. There's 14 people on this call right now. Shouts to Tizzy, Anastasia, Ben, Early, Fidel, Yvette, J. Troop, Chairman J. Phillips, Jomar Lopez, Kiara, Marilena, Mia, and Priscilla. I appreciate all you guys for sticking through an hour and 50 minutes of this call. I truly hope you guys got some value, and I look forward to talking to you guys tomorrow. If there's anything you want to see on tomorrow's call, if there's anything that you want to see on future calls, if you have some feedback, if something was fuzzy and you didn't understand it, if you have a question, make sure to send me that private message. Make sure to text me. I'm going to drop my phone number in the chat for you guys. Everybody here is a team member. You're a part of the family. If you guys are inactive, get active today because changes are coming within our organization that's going to help everybody for the better. Once again, my name is Gio, and you guys have a good night. Appreciate all you guys. Take care.